Remember, when in doubt, zoom out. I will be back. Let's see like if price goes there and there or not. I'll be back with the rest of the part of my video. So remember the time, it's 7:08. I went outside keeping this open like this, and as I said on the first part, now look at the time. What happened? That's 8:50 a.m. New York time, although this is 8:52 right now. And where did market came? For that liquidity. Okay, so I started recording little earlier than trade setup. Today I'm not trading yet, but this setup looks pretty good to me. Video might be a long one. Now what I want to see is price coming back here. If it does so, that will be my entry. Stop loss can put like here or maybe lower. This is the breaker block. Okay, the whole block is a breaker block, but I'm looking at this specific fair value. It can actually retrace from here, create another fair value, but targeting the 4 hours liquidity, which gonna give 2.74. If not, I mean, that's the optimal target. First partial can be on this level. This part delivered already, so I don't think I need it anymore. This relative equals inside of that 15 minutes extreme fair value that I was talking about the other day. Remember these liquidities, what I told about? That price may come and grab these liquidities and retest or refill this breakaway gap that price left behind a long ago, create this limit order. So this is paper trading. I'm not trading today. So yeah, I like to risk 1%, whatever it gives me. I'm expecting to get the order filled around this area because 3 fair value gaps aligns over there. Sell side imbalance, buy side inefficiency. Around the same area, buy side imbalance, sell side inefficiency. And whatever price left around this level, the first partial should be here. I'll explain why. But and if you can see, I'm not sure you can see this or not, but I have wrote 4 hours due SSL, sell side liquidity. Why I wrote due, I will explain in a second. So let's just see if market gives me a feel around this level or not. If not, I might need to take entry when price comes to this breaker block, like the extreme breaker block. Breaker block is the entire set of candles. Okay, that's why I'm expecting price to go around this level, because it's the entire set of candles. So I'll keep it like this, and I might do some fast forward video with this one. So this is a paper trading. When the days I don't trade, I put paper trading on. I hope it's coming here. That will like give me more confident in terms of entering into a short trade. After this sort of runs, I might need to think about another way to enter, because what happened here is market tapped into the 0.5 level, then market is tapping into that 7.5 level. Now it's coming down, so if it goes away from that level, I don't know, I might need to put another entry. Why this is a breaker block? Usually I consider this swing high and that high. There is a specific reason, I will explain why, but usually I look at this one and that low, that high. So market took the liquidity, gave a market structure shift with this close, and this might become the breakaway gap if market doesn't come and fill me up over there. I'm expecting market to go here so that these 3 confluences can actually meet over there. That's why I put on the extreme level over here, which is somewhat like 50% of the fair value. So let me just take off the gun box and then let's go here. So this is some sort of live execution that I'm showing you guys, but with the paper trading, okay, because I'm not trading now. So yeah, that's exactly on the 50% level as well. So I hope market is going to get there and give me the entry. Okay, let's explain why I'm bearish. Okay, what happened on the 4 hours after this huge gap? Okay, new week, new month, new day opening gap over here. From Friday till Sunday there was a huge gap, so that's why I don't want to consider anything inside of this gap. But after the gap, what happened is, that's the first 4 hours candle of new day. So I cannot actually draw on this. Just have a look on my crossers lines, the horizontal and vertical lines. So what happened here is market created this high and low on the first 4 hour. Then market gave a inside candle. Inside close means it didn't take the previous 4 hours liquidity from low or the high. So I have no bias during this. Then this candle took this liquidity and closed way below the low as well. Okay, so now my bias, now I have some bias. What is the bias? The next liquidity target should be this. What price did? Opened, created a small high, closed below that. So my next liquidity target is this week. Price opened, created a high inside of this fair value, and then closed below that liquidity level. Now my next liquidity is this one. That's why I have this one marked and this one marked. I will show you why this one is marked. So now what happened with this one? This is a inside candle, but what price did after this candle is price created another inside until it took this liquidity. And what happened in the like with this 4 hours candle is price took the liquidity from low, failed to close below that level, closed above that low. So next target shifted from the lower side to the higher side. So that was the next target. Now what market did is price took that liquidity, yeah, but failed to close above that high. Okay, it failed to close above that high, this candle's high. Now what I want to see is market taking this liquidity. This is for the inside candle. Remember, my main liquidity that is due, that's over here, because this candle closed below the previous level. So next liquidity should be this. So this liquidity is due. So this is one of my bias that market going to go here and grab this liquidity. And now what happened here is market failed to close. That's the liquidity level. Market took the liquidity but failed to close above as well. So immediately my next liquidity level is here. So price should take this liquidity first, and based on this 4 hours close, if it closes below this level, then my liquidity gonna shift to that one. Okay, so close below this, straight away I'm targeting this. Let's see what 5 minute did over here. Let's turn on. Okay, so it did not give me the fill yet since it retested that breaker block. So instead of here, if I entered on the breaker block, okay, then I had to put my stop loss on that high, this breaker block's high. Okay, and in that case it would be exactly 2. What I want to see is this current 4 hour candle. Okay, it's still a long time to be honest, but this current 4 hours candle that has still like 2 hours and 58 minutes to go, I want to see that closing below this line. If it closes below that, it gonna go for this, and then eventually it gonna go for this. Okay, but if it comes, grabs the liquidity of this low and then closes above that line, then the structure or the bias will shift to here. Okay, that buy side, this buy side. If market closed above this line, then this could be my new target for the buy side, and that could be my like possible buy side target as well. So I can close some partial on this level and then I can go for that higher level. This is where price is coming, because it's due for long time. It's due for long time because here market closed below that previous low, so that could have been my previous liquidity level. However, what market did is it came almost to that level and then shifted, gave a inside candle. See, like a lot of liquidity like that of previous 4 hour, current 4 hour has been taken in between, okay, but nothing went for that buy side or the sell side. So whatever is happening here is all the inside candles. So the inside candles with the same calculation is giving me a sell side bias, where my original bias was around this level. So that's why I'm on the 5 minutes, I'm looking for a open, a high. Now I'm looking for a low and a close. Okay, so that's why I made this line. So I want to see a open. I think I have the open mark as well. Yeah, so as you can see, like there is my 4 hours open mark. So there is the 4 hours open. I wanted to see a high. That's the high happened, and that high actually grabbed the liquidity of the previous swing highs. Especially I was looking at this level, to be honest, but since this can be a possible swing high, I marked there, like that's the highest price took the liquidity from. That's why I marked that one as well. So liquidity, but no matter like this high or that swing high, market took the liquidity. The lowest point was here. I wanted to see a market structure shift. That's where it's shifted, and now where is it going? It's going towards that previous 4 hours liquidity level, which is here. And if it closes below this, since there is no swing low or anything, I'm hoping like it's going straight to this level. And if market, like whatever happens in between, I don't care, but by the end of this 4 hour I want to see price closing at least below that line, or if it goes below this, that's even better. Okay, and if that happens, then the profit target gonna shift to here. There will be a lot of things happening. So that's how I actually like on my channel I have uploaded a 8.77 hour video, if I'm not wrong. That's how I actually got that 8.77 hour. I might like stop the video here, since it will be a very long video to look at, but I hope I have explained how I'm looking at the market and why I'm targeting what I'm targeting. I will be back. Let's see like if price goes there and there or not. I'll be back with the rest of the part of my video. So remember the time, it's 7:08 on New York time. It's 7 a.m. So maybe this won't be filled, like this fair value won't be filled, but since it's like reacting from this breaker block, so 5 minutes breaker block, it reacted from the 0.5% or the mean threshold exact on there. The next candle opened, went to the 0.25 or 25% level, came below that, and then never went to the breaker block. It is straight away coming to that liquidity level that I marked. I went outside keeping this open like this, and as I said on the first part, now look at the time. What happened? That's 8:50 a.m. New York time, although this is 8:52 right now. And where did market came? For that liquidity. So what happened with the 4 hours? That 4 hours, it is still going, and it came until this level. However, I believe that's also due. So if it closes around that level, it can go up to that. I'm not too concerned about what happens after this. As I said over and over again in my previous videos, that what happens in the market after taking a profitable trade or after doing the basic analysis correct, I don't really bother about that, because what was that trade? If I got the entry, it's 4.86. okay, that was the breaker block entry that I didn't take, because I thought it gonna come up to this level, or at least, you know, since it created this small fair value, I was considering the fair value gap entry. But anyway, since I'm not trading at the moment, I was not expecting this big of a candle. I was expecting somewhat around this level, price might come and retest the fair value and then go for that one. But within that one single 4 hours candle, market took what it left behind. Okay, and this one left behind from this area. What happened here? Inside of a 4 hours fair value gap, market came, respected, came to the low. Okay, and what happened during that low? Price took the highest liquidity from here, failed to close above. Now next one is here, took the liquidity close below. Next one is here, took the liquidity close below. Next one was here. But what market did is, as I'm saying, you cannot be 100% right every time, because there might be some other confluences around this area, and if you already know what is here is the weekly fair value gap and volume imbalances around this level. So took the liquidity, next target was this one, but price didn't go here. What price did is it took the liquidity from there. Now it failed to close above that line. Okay, it failed to close above. So now the next liquidity level is this one. Okay, this green candle's low, but market created some inside candles like this, then took the liquidity, closed above. Now this was the target, gave some inside candles, and eventually took that liquidity, closed above. That's the target, took the liquidity, closed above. That's the target. But remember, it kept two of the liquidity targets left behind. Okay, that's the due sell side. Although I didn't mark here because I marked the sell side on the daily for these specific levels, because that's a daily swing low. Anyway, as I was saying, let's say I didn't take the entry on this specific candle. However, when I saw this reaction, I could enter from here as my market entry. Maybe I could have got the entry from this level. Still, it could make me 4.35 and keeping the same stop loss. Okay, I'm not going anywhere below this, but if I wanted to be more safe, still from that entry and the high of the order block stop loss, it could still give me 3.42, the same liquidity. But since it's the breaker block, that stop loss looks pretty safe to me, because if I'm entering on the breaker block, if that's my confluence, okay, if that is my confluence, then if price goes above the breaker block, even if I put my stop loss here, I will be stopped out, because my analysis is wrong right when price goes above that line. Now, I'm not an expert, as I'm saying. I just want to make my one simple strategy as perfect as possible. Okay, adding all these confluences, what can happen, where can it happen, I'm observing all those things every day, even if I'm not trading. Like today, I'm not trading. I just connected my paper trading account. I tried to put this entry, although it didn't fill me up over there. That's why I couldn't enter. But however, if I considered like it can retrace from here, now I know, right? Now I know that it can happen. That's the exact mean threshold of this breaker block that price tapped with this, as I showed on my earlier part. That's the exact 25% level of the breaker block that price tapped with this week, and then it came below the breaker block. And what happened? Market didn't even retrace to a single fair value gap. Now here is the fair value that market retested. Okay, but can you take this entry? I don't really know if you can take this entry or not. I cannot. Why? Because just look at the entire leg where it is pulling back. Let's say that's the lowest before this pullback. If price is not on this 6.2 or 7 on or 7.9 level, anywhere near this level, I cannot consider. Yes, I can take entry at this 6.2 level. I called it before it happened, and that's what my first part is about. So in my future videos, these things are coming. Okay, in my future videos, all these things are coming. That's why I said over and over again why the most important thing that you need to learn is the open, low, high, close. So what happened in this specific part is price opened on this candle. Okay, the new 4 hours. Before the 4 hours, price closed around this level, and that was aligning with my other 4 hours liquidity level, buy side liquidity level, that price took but failed to close above. As a result, I was targeting the low here then here, and overall this low was due. That's why here I didn't mark it because of the relative equal. I marked it because it's the 4 hours sell side liquidity that was due for a long time. Okay, and why it was due, I had the explanation before. I will explain it in future as well. But open, close, high, low, that's the single most important thing that you need to know before you want to trade. Okay, so price, now where price is, I don't care. It can go grab these liquidities because this one is due to. Price took the liquidity, failed to close above. Now this will be the first target, and this one also was due from this level. Okay, price took the liquidity, closed below, so this was the next target. However, the next candle opened, took the liquidity higher and closed below that level, below this high. Now this should be the next target. It didn't do it. It went to a point of interest, grabbed that liquidity from here. Now price is coming for whatever due was there. It's now going that way to fix up those issues, to fix up those dues. Okay, it's now delivering that. Now you cannot be right 100%. This is where you need to have some sort of a strategy to identify that yes, this is the move I need to catch and this is the move I need to avoid. Remember, when in doubt, zoom out. What I did is I took an entry on 5 minutes, or I showed a model on 5 minutes, right? I showed an entry model and liquidity target that I targeted on 5 minutes. What is zoom out means? 5 minutes starts from here until all this. This is what happened in every 5 minutes. Each candle is representing that. Now, I didn't know about this until I looked into the 4 hours chart. So that is zooming out, because all those 5 minutes candle now became only 6 4 hours candle or 5 4 hours candle. Okay, so when in doubt, zoom out. That's the best part. Thank you, and until next time, take care. Bye bye. If you are new, subscribe to the channel.